43.88. The closing low actually was only about 60 points below here. So in other words, the intraday low was a good deal lower. It's about 42.20 during that week in late January. It's the ongoingness of all the issues that I think we've been kind of contending with for a while right now. An already depleted market. You have the shadow of the Ukraine situation, which obviously doesn't help. But in my world, that was not required to get the market down 2% today, because we traded below this level 4 weeks ago when we weren't really sitting vigil about an invasion of Ukraine. So in other words, the market is still trying to figure out exactly where conviction lies, where demand lies. And I feel like if it was mostly about Ukraine, I don't think Microsoft and Alphabet would be down 3%, more than the overall market. So it is just the combination of that valuation compression in high growth and secular growth stocks, along with this idea that
Bullard did speak again for the 45th time.
But
in the
interestingly,
last week.
the Treasury market is, the yields are slipping back a little bit on this sort of safety trade. And, if anything, we've sort of moderated some of the most intense Fed rate hike expectation. But, yeah, he's out there reminding everybody that he's still around.
100 basis points by July, yes. Melissa.
Maybe the 10th time will be the charm in terms of convincing some of his colleagues of a 50 basis point hike. Kourtney, where do you stand in terms of your conviction on where the markets are priced here? Are you finding opportunities, or are you battening down the hatches?
Well, it's so good to see all of you today. You guys have me laughing about the Fed. I totally agree with Mike on where we are right now. This is not about Ukraine. I mean, candidly, I actually think that we're seeing some exacerbated moves today because volume being a little bit down. I mean, it's about flat from where it was yesterday, and it looks like we're about 15% lower than where we have in the last 5 days and about 20% versus the 20-day average. What does that mean? At least what we're seeing at Loop Capital from our institutional investors, both on the global equity side and in the bond market, people are sitting on their hands right now. Institutional investors are not really moving. When you think about whether the Fed goes 25 or whether it goes 50, one thing's for certain, money funds are shortening their weighted average maturities, and they're sitting on cash waiting to see what happens on the 16th. So, I think right now, like I said, we're seeing some exacerbated moves just due to lower volumes on the exchanges. And there is some jitteriness to the market, don't get me wrong, but I think it's more retail driven than institutional.